All right, everyone. Good morning and happy Monday. I hope you all had a better weekend than Luka Doncic. But all right, guys, futures trading lower, digesting all of the news and the headlines. S&P futures down about 1.5, the NQ down about 1.8, the RUT down about 2.2, and Bitcoin down about 6 piece. 6 piece nugget for Bitcoin. At one point last night, Bitcoin was down about 9.5 to 10%. But yeah, before we jump in and kick off the new month of February, let's take a look here at the trades they did back from January, and I'll explain why I'm showing you this. But back in Jan, in what I would call a pretty less than ideal market, we ended up closing 7 trades with 6 winners, 1 loser. And a few things we traded here were TSM, OKLO, Bitcoin. We have some SMH calls open. We traded Meta. We took a loss on Bitcoin. Took a couple W's on Roku last week. And we are also long, let me change that real quick. We are also long TSM. But the reason I show you this is, kind of sitting there this morning thinking, all right, what's the game plan today in the room? Am I jumping on the mic and we're getting long, we're getting short? Do we jump into the open, take a lot of action? And as I'm sitting here looking at the spreadsheet, thinking about what's the goal in the room? Well, the goal in the room is the same goal I have in my own account. 12 months down the road come December, I want to look back at my January tab, February, March, April, all throughout the year. I'm just trying to put together a pretty spreadsheet. It's pretty much the only goal in trading, right? Meaning not catch every move, be short for every flush, long for every rally. Whether I'm taking 5 trades a month, 10, 15, 20, I'm just trying to stack together good months. Big part of doing that is sometimes the realization of, I might not be in a market that's really supportive of, this might be a great month of swing trading, or might be a great month for buying calls. There's just going to be months like, a lot like a January. Though I think we did pretty good here, you're not getting that bigger directional move, right? Whether it be long or short. And in a nutshell, here's your market going back to December. So if you're having a little trouble on the swing side of things, I think that's a big part of it. A little flush, we're popping, big flush, all right, big rally. Here comes the bulls, and now we're gapping down, pretty much back to the midpoint of that big 3-day squeeze. To be fair, though, put aside the news headlines, the tariffs, all that good action. This is just very typical action for a 3-day squeeze. And if this was a 15-minute or a 5-minute, this is just what a squeeze does before they break out and make a big move. All right. When you're getting that blue dot, you're building up all the energy. You're going about 1 average true range move below your 21 EMA. All right, so you flush down towards your -1 Keltner channel. And then you maybe rally back to the midpoint. You maybe rally into the +1 ATR level. And you flush back to the midpoint. A squeeze is just a lot of ugly back and forth chop. Till one side can take the edge, break it out, fire the squeeze. And from here, if that's the bears, this could take the futures down to, 5,600. When they're building the energy, it's a lot of that +1, -1. We're 1 ATR above the 21, we're 1 ATR below it. When they finally get around to firing the squeeze, then they tend to take you about 2.5 to 3 ATR away from that 21. So we're banging our head against a wall, +1, -1. We're bullish, we're bearish. They break it short. All right, then we're flushing down probably towards 56. Bulls take control, they break it out, squeeze fires long. That can get you into, ES 6,400. Not a guarantee, of course, but when a squeeze fires, if it is a well-behaved one, they tend to give you that kind of move. So heading into today, putting aside news, just, good old price action charts in front of us. Bigger picture, no, nothing has changed. Stuck in the same 3-day squeeze. We're stuck in the same range. Now, granted, you're waking up today. Bears have definitely got the edge here. Down on your 1 hour, 30 minute, 15-minute time frames. Bigger picture, it's just a 3-day squeeze, 3-day squeezing. A couple of things we could look at. This week, next week, any point coming forward. Back above that 21 EMA in that momentum line back above zero. Then the odds favor, they probably want to break it out to the upside. This week, next week, at any point moving forward, price below the 50 down here. Momentum line below zero. Then the odds favor, they probably want to break it short. My thinking is, all right, in the absence of those two things, well, we're not above the 21 with a buy signal, but we're not breaking below the 50. It's just ugly, bigger picture chop. Beauty of that is, if you want to take more of a day trading approach, it's a lot of ugly chop in a pretty big range. So S&Ps can flush from 6,000 down to 58. Now you catch you a good $200 flush. Well, bigger picture, nothing's really changed just yet. But that's a flush that can pay you nicely if you can catch it. They rip it back into 6,100. We're not breaking out, not firing the squeeze long. But if you can catch that push off of a 15-minute, 5-minute, 30-minute, you can find your spots in the chop, but at least understand it's chop. If you want to keep on taking that swing trade approach, you got to make those adjustments. Right? Scale down your size, give your trades plenty of time. And then for a lot of us, a tougher thing might just be, I might not trade today. And I might not trade for a few days. My bigger picture goal right now is, whether I day trade the market short, regardless of any kind of short-term trades, I want to make sure that I'm there the day the squeeze fires. And whether it is a flush down to 56 or a move back into 64, I want to be there with all my cash, trying to take full advantage of that. I've never hit big home run trades in this kind of crap. I've had some big time shorts and some pretty big longs when they get the party going. So there's a lot of emotion and volatility behind it. And again, don't discount that. Volatility can also mean opportunity. We're waking up here today. We got a sell signal on the 4-hour, 2-hour, 1-hour, and the 5-minute. Yeah, that kind of action down on your lower time frame, you can find a spot for a great day trade short. In the chop, the market will present those kinds of opportunities. That bigger, more explosive, call it sustainable move, that comes in your squeezes fire. With a weekly, a 3-day, and a 2-day squeeze setting up, my thinking would be when we finally get there, it should be a big one. Could be quite the doozy, as they say. And again, putting emotions aside, looking at my weekly chart, do I want to short the crap out of that? CNBC this morning, they probably get me feeling like I might want to short it. Markets in turmoil kind of action. It's a 13 out of 15 on a scoreboard. So this is my kid bringing home a B+. All right, yeah, you got a little room for improvement here, but B+ report card, I can't be too mad. 13 points out of 15. We're only 3 weeks into a brand new squeeze. We're above our 21. Funny enough, if I liked it last week at 6,100, indicator-wise, nothing about it has changed. And to be clear, I'm not trying to preach for, all right, well, I'm going to take that, and then at the open, I'm jumping in and buying every call here. I'm not looking to do anything, but bull trend, bull structure above the 21, could get a lot more bearish, put it that way. Weekly of the NQ. Two weeks into a brand new weekly squeeze. Now, take that previous conversation into mind here. What would normal action be in a weekly squeeze? +1, -1. That could be normal weekly squeeze action, short term. That could be a pretty big flush. Right? They work it down to 20,250-ish. But as she currently sits, we hold our 21. We got a 13 out of 15, bull trend and bull structure. So I think for all of you in here, mark up your weekly 21 EMA on the futures. today, tomorrow, throughout the week here, that could be a really big over-under. Right, previous support, right near the previous lows. Tis a big level. What I don't want to do is short at the weekly 21 in a weekly chart that, for the most part, still remains pretty bullish. 13 points out of 15. It's a B plus report card. Tomorrow morning, the NQ Weekly brings home a report card of a C minus. All right, well, things are getting a little worse here. Next day, we've got a D minus. All right, now we're going backwards. Maybe I do look for the short, but it's got to be based on price action, structure, and signals, and not, oh my God, we got some headlines headlining. So yeah, that's my best piece of advice, guys. Just be patient. It's a long year ahead. The old saying, you kind of overestimate what you can accomplish in a week, and you underestimate what you can accomplish over the course of a year. Traders are pretty good at doing that. Your goal should be doing your spreadsheet. You're filling out your journal. You've got your January tab. Now you're going on to February, then you're moving on to March. Right? Yeah, we'll be here eventually looking at the December tab. Did I do my job? When the market's good, jump in, get aggressive, put on the size, take advantage. And then when things are a little bit murkier out there, waters are a bit more choppy, yeah, I'll take a couple of shots, but I'm not going for the kill. I'm not trying to dig myself a hole. Been there, done that. I can remember the days where we're getting the volatility, we're getting these giant intraday swings. I'm long 1 minute, and then I'm short, and then I'm going to bed long, and then I'm getting short at the open. I'm the guy doing a million different trades back here. Market's making a million different moves, but we're not really going anywhere. Like, oh my God, I got to get short. And then you wake up in a panic. Oh boy, here comes a short squeeze. I am the short squeeze now. And then you finally cave in. You're getting long up here, and they flush it. So easy enough to pretty quickly dig a big hole. So be chill. Long year ahead. And my focus is always just this week, 10, 12, 15 weeks down the road. What do they do eventually with that giant multi-squeeze? I don't think it'll be a small move. All right, NQ, a weekly, a 3-day, a 2-day, and a daily. So buckle up. Shall be an interesting week ahead. Let's go take a quick look at Bitcoin. If you're a headline junkie, Bitcoin down, 6.5%. Oh my goodness. Look at a 2-day chart for Bitcoin. What's it been doing since December? If you speak the language of the squeeze, that beautiful language, this is all very normal, healthy, typical price action. Nothing out of the ordinary. Big squeeze back here. Right, kicks off a big leg higher, and then the thing just gets gassed. Right, huge push, big rip, and then the thing is just exhausted. A little flush, little pop, little flush, little pop, little flush, and just chopping everybody to death in a brand new daily, 2-day, 3-day squeeze. When they're doing that down on a 5-minute, 2-minute, 3-minute, nobody's really looking at it. It's not as emotional. Bigger time frames, bigger ranges, or bigger day-to-day, week-by-week swings, but this is just a 2-day squeeze, 2-day squeezing. Indicator says, yeah, mostly bullish, but a little neutral. Push it into +1, flush it down to -1, push it into +1, a little bit above. Last night, back down to -1, little pop coming through. It's not easy to trade from a swing trading perspective. What is easy to trade is they break it out and they're taking the thing into 120,000, or they break the squeeze short and they're dumping the thing into 80,000. But the market's got a real knack of, well, we're going to beat everybody into the ground here. Trap them long, trap them short, trap them long, trap them short, and then eventually, all right, let's get the party going. You can find plenty of great day trade, shorter term opportunities in that box. But my favorite trades are, all right, here's a bigger time frame squeeze. I'm going to build up a bigger than typical position at that 21 EMA. Let that bad boy fly. That moment in time in a squeeze looks like meta. All right, there's your white arrow. You get the perfect 15, everything lined up. Doesn't mean the trade works, but that's where you pull the trigger. So if it's a matter of a white arrow, NQ weekly, or NQ any time frame, I can read into it and look at structure, momentum, and get all kinds of detailed here. But at the end of the day, I don't have a white dot. I don't got one for a long. I don't got one for a short. So if I'm waking up today throwing a bunch of cash at this 3-day squeeze, I'm not quite sticking to the game plan. But all right, a couple pre-market quotes here from the big dogs. We got Apple down into 230. And Apple, a name with not too many squeezes, so not really on my radar at the moment. It's Apple. It's always on the radar. But all right, down to 230-ish. And then Amazon down to 234, 235-ish. Which for now will change nothing at all about Amazon. It's a good-looking chart. Netflix down to 966. So more of the chop. Broadcom down into about 215. I think we've seen worse gaps down in semiconductor names. NVIDIA down to about 116-ish. So I do wonder here. And I've got a couple of trades open that wouldn't appreciate it. But I do wonder, we're about 3.5, 4 weeks out from NVIDIA earnings. Do they got to walk it down to, that 105, 100 level, then maybe try to put in the bottom down there. And, then we find out what's good after earnings. My preference is NVIDIA's back to 130 in the blink of an eye here. But you got NVIDIA down about $5 or $6. Microsoft down another 5. But, more of that same conversation. It ain't pretty. It ain't enjoyable. Not the kind of thing you want to bet the ranch on. But this is just a weekly squeezing. They pop it into +1. They flush it down to -1, pop it into +1. Nobody likes that. What everybody loves is, well, hey, here's a squeeze firing Microsoft down to 370. Or Microsoft into, whoa, the hell happened there? Or Microsoft into 490. They're really good at rope them in short, rope them in long, do it a good 2, 3, 4, 5, 10 times, then go get the real move. They are very nasty about doing that. Meta down about 15 or so bucks into 675. Yeah, $11. Google back down into 200. Google has earnings tomorrow. Earnings for Google tomorrow. Tesla's down into about 390-ish. TSM down into 200. And the SMH back down into 236. So one open trade we have here is TSM. This is also a good conversation to have this morning. Pretty much any given day you can fire up your scans. You're going to find a good-looking setup. So if I jumped on this morning and I ran my weekly squeeze and my 3-day squeeze scan, they would both show me TSM with every box checked off. Squeeze, perfect score of 15, the structure, momentum, trend, white arrow. Everything I'd want to look for in a setup. And even better, they're doing that on 2 different time frames. So we can find a good handful of those, time frame to time frame pretty much every day. Be a little careful right now. We're not in the right kind of market, I don't think. We can probably go find a good 3, 4, 5 more TSMs today. Hey, good-looking squeeze, all the bells and whistles. When will that work really, really well? And I hate to use the word easy, but where can you take that TSM setup and make big money easier? If you got the NQ over here with its own giant squeeze saying, hey, let's go for it. TSM takes its hand, or the NQ takes its hand, put it under TSM's bottom, and takes it towards the promised land. Swing trading, day trading, scalping, the entire game gets way easier when you got the indexes pushing you forward, or if you're trying to short things, indexes leading you lower. Till that picture changes, or until they take that daily, 2-day, 3-day squeeze, fire them, you can find bullish ideas like TSM. If we jumped in Friday, we got the 250 calls for April. And you can find things probably that are the opposite of TSM. Squeeze, broken structure, bunch of sell signals. If you want to take action on those kinds of ideas, go down to your 15-minute, 30-minute hourly time frame for now. They can work for a day trade. They can work for a quick in and out. Where I think they'll continue to be tough is, all right, I'm going to take the TSM 3-day squeeze. Now I'm going to buy calls that expire in 10 or 15 days, and from that, I'm trying to call for a push into 240, 245. If the QQQ looked like TSM, you could buy the 240s for this Friday, and I think a decent chance they probably hit for you. I'm all the way out in April. I've got like 80 days till expiration. That might not even be enough. Might take the market a while to keep on chopping and figure itself out. So yeah, overall advice is just be patient, long year ahead. And whether it means you're taking 10 trades today or no trades today, you want to be here in about 30 or so days, putting together your February sheet. And of course, the goal is, all right, I'm looking at my sheet for February, and I got a lot of winners, a couple of losers, good win rate, all the above. The bigger, more important goal should be, I don't want to look at my sheet and, well, I forced a short on that morning, and then I got a little bit spooked, and I forced a long over here. If you're taking losses, that's not a problem. If it's your go-to trade, good entry, all of the all the proper things that make for a good trade. Not, hey, here's my spreadsheet, and I got caught up in the chop this month, took 50 different trades, and doesn't make for a good-looking spreadsheet. But all right, my friends, any questions for me? Anything y'all want to look at? Hang out for another 10, 15 minutes or so. And then, yeah, buckle up. Shall not be dull. Yeah, Ben, the only thing trying to keep it green here is gold. Let's go check the weekly chart here, because I did. Let me see. It's a really, really nice pattern here. So kind of like the Chicago Bulls back in the 90s. They're going for the three-peat. One weekly squeeze, big push, and chopping. Weekly squeeze number 2, big push. You're chopping. And now you got number 3 here. Fresh momentum cross, little breakout. Could get you into 29.50-ish. Yeah, gold looking pretty. Gold looking really good this morning. All things being considered now. And yeah, Ben, thanks for hanging out. I appreciate it. Yeah, BJR, good question. So the focus on TSM for me, and the reason I went all the way out to April on the expiration, I want to play for a move off of the weekly squeeze. If you're trying to play for a move off of a daily or a 4-hour, then we're probably not going to go with 80, 90 days out. More likely anywhere from, it could be 10 to 15 days out. So in terms of the weekly chart here, The idea of that firing long gets totally invalid. Like, got to take the idea, throw it in the trash, never think about it again kind of thing. Would be a break below the weekly 50. That's down another 30 so bucks, around $1.70. The first, oh, there goes my water. Hold on, guys. All right, crisis averted. Can y'all still hear me? Make sure I didn't take myself out there. Okay, thank you. Yeah, so for the TSM weekly squeeze, they break the weekly 50, the thing's gonzo. I most likely break short. But the first spot where you have now you're starting to get some issues would be a break below the weekly 21. So that's down around $1.95-ish. So on the gap down this morning into about $200, I'd have to allow for another $5 or so lower before I'm looking at it thinking, maybe I don't want to be in TSM anymore. If they can keep it around that 200-ish, keep it above the weekly 21, keep it above the 50. I mean, the tricky thing for all these trades right now will be, for anybody trading the individual stocks, it's not going to be a TSM thing. It's going to be, put it this way. We get good news on the tariffs and S&Ps rip, QQQ rips. Then we're probably looking at TSM back up here at the highs. Bad news comes out, S&Ps get slammed, QQQ getting spanked, and then TSM's probably going to fall apart. So I think for any swing trade right now, there has to be that element of time. If I had the call that expired this Friday, that trade's most likely going to be dead on arrival. Good $10 gap down. That'll do the trick on a weekly call. Being out there in April, they keep it above the buy zone, keep structure, keep momentum above zero. Might take another couple of weeks there, but I do want to give that time. So for TSM, I'm watching that 195-ish level is the initial line in the sand. Good question. Good question. Yeah, TPS, ES, excuse me, ES giving the weekly 21 a little Monday morning smooch. Says, hey there, old friend. The real tell in terms of, something's changing with our market would be if the weekly chart begins to change. If you're in my room and you're doing the pre-market preps, you'll remember on the pullback here, your 1 hour charts were really ugly. Daily charts got pretty ugly. It was a good size pullback, but from the weekly charts perspective, it was just a kick back to your 21. All right, so if you're down here getting, end of the world short, betting the ranch on the out the money puts, well, if we break it and collapse the market, that might work. But at the same time, if it's just a pullback to a weekly 21, might be a little unpleasant. So when I look at that weekly chart for now, I can't think, hey, I've got to go short everything. Under the weekly 21 EMA, the score is dropping. We're getting more sell signals. I mean, great way to look at it. When's the last time the S&P futures closed below the weekly 21 on a weekly basis? October of 23. That pullback held. But also take note, they kind of take their sweet ass time. Pull back, hold it, and then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks later we push. Pull back, they hold it. A couple of months later they push. So yeah, if we're here next Friday or next Monday rather, and we're coming into the week, S&P's QQQ, they all had a weekly close below their weekly 21. That's structurally, it's a pretty big shift in dynamic. would be a feat the Bears haven't pulled off in quite a while. And Q tips. Just to be really clear, I'm not trying to sound like a perma bull. Like, I'm not buying anything today. Yeah, not my opinion, just the indicator saying it's not a bearish weekly chart yet. Had a good looking weekly squeeze, gave you a little push, nothing too crazy. A little pullback, and now we are just very much stuck in the mud. And we got to get a tow truck to help us out. Yeah, Greg, I cannot believe that trade. Yeah, is a 30-year basketball fan, not 30 years, but as a longtime NBA fan, yeah, that doesn't to me make any sense from a Dallas perspective. That's just something we don't know, but yeah, that was a wild one. All right, good morning there, folks on the YouTubes. Good to see you as always. Frozen Nice, good morning, good question. What I recommend small cap traders do during market crashes like this? Well, I don't think we're crashing. But let me knock on wood here. Market might say, all right, hold my beer. I think the key in these kinds of markets when you take a 40,000 foot view of things, and we're just trapped in a really big range. I think the key for big tech traders, small cap, whatever the case may be, if you want to continue to be actively trading, just scale down your time frame. So my best bet would be, all right, well, everything that I love about the 3-day squeeze on TSM, which can be a multi-week kind of move. Let me go find that moment in time, squeeze buy signal. Let me go find my go-to setup, but down on a 5-minute, 15-minute, 30-minute hourly. I don't have to call for day after day of continuation. I don't have to call for day after day or week after week of one clear direction. I can find a moment in time, jump in, hit it, take my cash, get the heck out of there. And then I'm waking up and we're gapping down 2%, gapping up 2%. Then you're not as impacted. So if that makes sense, that's my best piece of advice. Take whatever works well for you on bigger time frames. Go do it on a smaller time frame. Long, short, 5-minute, 15-minute. The other alternative is you're either A, not trading at all, which, myself included, we got to remember there's nothing wrong with doing that sometimes. It's, one of the benefits of being a trader, you can kind of go do your own thing if you want. But if you are coming in here and, all right, I'm going to pick up some, so Amazon on the gap down, I'm picking up this, you're doing a little shopping this morning, do it in a fashion where you look at it tomorrow and they're down a bit more. Right? And then you're looking at it Wednesday and they're down a bit more and things keep on pulling back here in the short term. You don't want to be in panic mode. And that solves a lot of problems. To be completely honest, with our TSM trade, I can give you the level 195-ish. And I'll look at that level and probably take action at that level. But the real peace of mind for me comes from knowing if TSM gap down to 140 today, I'm not in a position, I haven't put myself in a position, it's going to blow my account. Haven't put myself in a position where it's going to give back my month of January. It'd be annoying. I'm not going to enjoy any of it. It's not a weird kink of mine, but recognize the fact I'm not in the market where S&P's QQQ are saying, come on in, Junior, water's warm. The fish aren't quite jumping in the boat. This is more like we got 100-foot waves smashing into us left and right. Good morning, Britain Rising. Good question. I see mostly you use calls, but sometimes put credit spreads. How do you choose when to use what, as they are both bullish setups? That's a really good question. So I think one factor as far as, all right, I'm going to buy a call, I'm going to do a debit spread, I'm going to do a butterfly. You want to check the implied volatility of the underlying. So a good example could be a name like a GameStop. It's typically going to have really high IV, right? Meaning options, puts, calls are a little bit jacked up a premium. In that situation, I favor being a seller of the option. If GameStop trades at $100 and the 95 puts are just crazy jacked up a premium, and I just sell the 95 put in a credit spread, and GameStop goes nowhere, they're pretty chunky. I can bring in some nice premium. With the crazy IV, if I buy an out the money call in GameStop, and it just kind of slowly meanders its way higher, that move might not be big enough, quick enough to combat against the big IV. If I can find a daily squeeze and the name has, IV of 20%, well, then I really want to buy the out the money call. Squeeze fires, big breakout, you catch the IV spike. It is a beautiful thing. So IV can play a role, and then I also think the overall market. One could argue right now for a name like a TSM, well, maybe you should lean more into a 200 or a 195 put credit spread. Yeah, it's a great looking setup, but you don't have a market behind it. A lot of volatility. Maybe this just goes into a weekly squeeze for another 2, 3, 4, 5 candles. Well, me being the buyer right now of the 250 call, I wouldn't appreciate another 2, 3, 4 weeks of chop. The seller of the out the money option, well, he's not getting paid quickly, but he's getting paid. So implied volatility, and then function of the overall market. Is it a market locked and loaded for a breakout, like right here, right now? Is it a neutral market? Is it choppy? Is it a drunken fool, like our market we have right now? Great question, though. Hope that makes sense to you. Yeah, Brandon, that's a good question. So on the futures labels over here. Oh no, I'm sorry, I misread your question. Yeah, so on my chart settings, I have extended hours on for the futures and off for the equities. And then when I'm putting like the squeeze labels on my watch list for the futures, I also have those set to the after hours. So after hours for futures, and then nothing else beside that. All right, guys, couple more here. Hey, good morning, Trader Galaxy. Yes, we did make the targets for TradingView, and they should have been pushed out. It would have been back in, I want to say early January now. But yes, we certainly did. And then, good morning, Sarah. Thoughts on Roku and the Tesla? Yeah, so for Roku, we were in and out of Roku a couple of times last week. For the most part, she was good to us. Good example of here's a nice setup. White arrow on the daily squeeze, white arrow on the 3-day, the 2-day. Not a great market behind it. You don't quite have the S&P's QQQ grabbing Roku by the hand and saying, "Hey, let's go for it." And even for the best setups, that can make their job of getting that breakout really, really tough. So in a better market, I would like Roku for a move, potentially into $95 from here. 3-day squeeze has the characteristics of something that could make that kind of move. A more important question is, am I in the kind of market that supports these kinds of things, making that kind of move? And I think for the short term, that's where we're having a little trouble. But there's a way that you can trade Roku right now and not get hurt. It's a major key, guys. Whether it's an earnings announcement or it's tariff news or it's the FOMC, CMI, PPI, all the above. If we put ourselves in a position to get hurt, then we'll point fingers and blame Powell, point this, point that. Point I'm trying to make is there's a way to trade Roku right now and a way to not trade Roku. And I think the way to not trade Roku is in a fashion where if it goes down to $80 or even 75 or 70, and that would be a painful experience. Small size, plenty of time till expiration, and a whole lot of patience to go a long way here, my friends. But all right, everyone, have a good Monday. Be patient out there. Keep your head above water, and then more importantly, don't be in a rush to do anything. It must be a human brain thing because for a lot of us, myself included, it's such a tough thing to do. But sometimes it is a good thing to do. So best of luck. I appreciate y'all hanging out, and I will catch up with you again on Wednesday morning.